All right, folks, welcome aboard here. This is Marziti here with the new Trader webinar series. We did a couple first runs of this, but I wasn't really happy with it, so I opted to break this down into a series of snippets and different things. So if you've watched the first two episodes that I did, a lot of this is going to be rehash of that same material, but my goal here is to do them in smaller snippets so it's easier to digest. All right. As I said, I am Marziti, your host. I am a member of the Bullish Bears community, and you're more than welcome if you're looking for a trading group or something like that. I'm not a moderator. I'm not compensated or anything like that. I'm just a user over there like everybody else. Any rate, the new Trader webinar series, Part 1. Let me be honest, these first couple videos are going to be dry. It's not going to be a lot of chart pattern and, Bollinger Bands and this and that and the other. It's going to be a lot of just discussion about things. So, like I said, yeah, it's going to be a little dry. So, whether you want to speed it up or, do it in snippets, however you want to do it. But it is important. It is vital that you get these things down, that you understand what it is, what the things I'm talking about, because if you don't, I can almost guarantee you that you will fail. And we will talk about this 90% of new traders fail. Why is that? And so on. And it all boils down to the stuff that I'm going to talk about in the beginning of this series here. So if you want to be in the 10% that succeed, you must get this first part down. Even if it is dry, you got to get it down. First, let's start with the disclaimers and things like that. This is a presentation created by me, Marziti. I am not a financial advisor. This video is for educational purposes only. I'm only a member of the Bullish Bears community. I am not compensated financially for anything necessarily. Information presented here does not necessarily represent the opinions of the Bullish Bears communities. You're fully responsible for your own trades, and you're welcome to copy and distribute the video so long as the author, that is me, Marziti, is given credit. All right, let's get into it. Why are you interested in trading? What is it that appeals to you about trading? Is it a movie that you saw, The Big Short, The Wolf of Wall Street, or Trading Places? These are some classic movies that go around that a lot of people like to watch, and it gets them interested in, wow, you can make all this money. Yeah, you can, but we'll get into all that as time goes by here. So what is your reason for getting into trading? What is your why? Maybe you just want some extra money. I know a lot of people, especially retired folks, and they want some extra money. They have stocks. Maybe they've got a couple hundred shares of Apple. And so they sell covered calls against Apple, against their shares. Or, maybe you're trying to build a college fund for your kids. Maybe you're just not making ends meet and you need that extra little bit of money. There's different ways to do it, but if you're that kind of person that's just looking for some extra money, then we're going to talk about these kind of things later on, but you may be more interested in swing trading and basic options. Speaking of options, this is not going to be a deep discourse about options. That is, options are a completely separate series. It takes a lot of time to discuss them, hours upon hours. So I'm going to go over the basics of options, but that is about the extent of what that is, what we're going to do here. All right. Maybe you're trying to replace your job and become a full-time day trader. And in which case, day trading now opens up as well as swing trading and options. And You have to understand that when it comes to trading, I've said this dozens of times, there are just as many ways to trade as there are ways to gamble in Las Vegas. There are equity swing trades, there's options, there's going long, there's going short, there's all kinds of different things, different ways to do it. There's combinations, there's whatever. Ultimately, you've got to find something that makes sense to you. In other words, let's think about American football, and we often talk about the playbook. And this is a book of different plays that the team has rehearsed and worked on, and the quarterback calls out, play number 16 with some descriptive there. And everybody knows that play. But, and every team has their own playbook. Certain plays work better for certain teams. If you have a quarterback that really can throw a long ball very accurately, then that team is going to be more into throwing the ball instead of running the ball. All right? So you need to know the personality of that. That team needs to know their strengths and their weaknesses, and they select plays that are aligned around their strengths, and they avoid the ones where they're weak. The same thing's going to occur with you as a trader. I'm going to expose you to a massive amount of different ways to trade, and not all of them are applicable at all to you. Some of them, a few of them will make sense to you really personally, and when you identify those are the ones where you want to focus. So day trading is certainly an option. I'll tell you very quickly my background story on that. I'd done, as far as day trading goes, when I first decided to go full-time day trading, I'd done some day trading, especially with the crypto early days, and I was doing okay with it, but really, it was nickel and dime kind of stuff. Well, I decided I was going to go full-time day trading, and I was convinced, because I'm technical. I was in IT for over 20 years. I'm good with math, blah, blah, blah. I was convinced that I would have this thing knocked out of the park, running a good solid system within 6 months. I can promise you that was the stupidest assumption I ever made. It took me over 3 years to actually understand trading. And the truth of the matter was, just, without going into great detail, but it wasn't really until I found the bullish bears and I learned something called price action trading, or price action, I should say, just price action, that all of a sudden I understood the chart. And that's why, I'm really grateful to the bullish bears. Grateful for Lucian for creating it and keeping it alive. Grateful to the moderators like Signet and Kevin and Jeremy, Creed Moore, different people like this that actually explained what price action is. And they each had it from their own perspective, but when I finally understood it, up until that, for 3 years I was losing, as we say, death by 1,000 cuts. A small loss here, a small loss there, blah, blah, blah. It wasn't until I understood price action that the charts finally made sense to me. And then my trading became more profitable. Okay? So, and price action, if you're going to be a technical analysis trader, and we'll talk about that a little bit later, but if you're going to be a technical analysis trader, which most of us are, you got to understand price action. It is the underpinning foundation for everything, whether you get into options, whether you get into swings, whether you get into this, whether you get into that. It is fundamental and key to everything. And so that is the purpose of this series, is to get you through price action trading. Finally, there's the category of people that it's the thrill, man. They saw Trading Places, and they saw, Eddie Murphy and all those guys there making all this incredible money and different things like that. And they're like, oh man, this is awesome here. Or maybe you remember the GameStop era and Roaring Kitty, who led essentially a revolt against institutions. That's the way I understand it anyway. He saw it, he had a strategy, he had a plan, he got a bunch of people involved in it, and everybody that was with him made lots and lots of money and blah, blah, blah. That's a disaster waiting to happen, because I was there when GameStop was going on. I saw all these people that knew nothing about trading. They just simply said, Roaring Kitty says do this. They did that. They made a lot of money. Then they lost. The majority of them, as best I understand, lost all of it, or most of it. Why? Well, because they didn't actually understand trading. They just, they got a good tip, if you will. They got a good tip, made a lot of money, and they thought, oh man, this is where it's at. But because they didn't have a clue what they were doing, they ended up losing over and over and over, and they lost so much of their money. Being in trading is like buying a lottery ticket, and there's the day you got the $500 million jackpot payoff day, and the winning numbers are going to be called out, and you've bought your tickets and all that, and you're sitting around the computer or the TV or whatever it is, waiting for them to call out the numbers, and you're excited, and then there's the first ball that comes out, and it's like, oh yeah, hey, it matches mine, and then there's the second one, and okay, that's not how trading works, and you will lose your butt doing that. Okay, let's just call it what it is. If you're in trading for the thrill of it, if you've got a lot of disposable money and you're willing to lose it for the fun of it and everything like that, you're wealthy or something like that, okay. But if you're not, if this is money you do not want to lose, you need to walk away right now. You need to walk away right now. Get me whatever it may be. Trading compared to gambling. Gambling is where people, they don't necessarily know the odds, they don't know this, they don't know that, and they lose over and over and over in gambling because they have a compulsion. They simply cannot stop trading, or gambling, I should say. They just simply can't stop gambling. And because of that, they lose their money over and over and over. Trading is having a plan of where you get in, where you get out, what you're willing to risk, and what happens if it goes, in your favor, against your favor, and so forth. It is an educated trade that you've done your due diligence, and so you need to be aware of that. All right. Now let's see. Okay. Enough of that. Let's talk about this business of 90% of new traders fail and why. New traders come in to trading, and they come into trading, they don't know what they're doing necessarily. They may not have a mentor. Most people do not have a mentor coming into trading. And they, they're trying to make sense out of it. And, we're going to do equity options, or we're going to do futures, or we're going to do options. And they go to YouTube and they start watching YouTube channels, and they watch these people with these trade ideas that say, let me show you how I made money on my Bollinger Band trade today. And they show this here. But the problem is that the new trader doesn't understand the context, the whole ideas. There's a lot of stuff they don't get. They don't understand because they don't have the full context, and as a result, because they don't have the education, they don't understand really why that trade works the way it worked. They may have gotten that one right, but they don't understand when the next setup happens and they take the exact same trade, but yet it failed. Well, why did the second one fail but the first one passed? And they don't understand that. So many choices on how to trade. Social media sites. Understand, social media sites are trying to monetize. Trading services out there. There are gazillions of trading services out there that say, join us. We'll teach you how to trade. They're saying, for $50 a month, $100 a month, whatever, you join us, you'll learn how to trade. Trust me, there are so many scammers out there. We live in an era where there are so many scammers. I mean, this is December of 2025. We have so many scammers around. It's just not funny. And they post a few winning trades to get you to click and come to their channel or come to their site and pay them money in the hopes that, they'll make rich. Because, you think about it. If they can get 100 people to come in and pay them $50 a month, that's $5,000 a month that they make just for these people that just keep paying their money over and over and over. And they keep making promises and all this kind of stuff. At the same time, there's all kinds of services out there. Now, there's a lot of services, and this is by no means a good, bad list, but you've got, things like Stock Rover, FinViz, Black Box Stocks. You've got Seasonax. You've got TradingView. You've got all these different services, and many of them are legitimate. Many of them are legitimate. But there are some out there, and of the ones that I've talked about here, those that I've mentioned by name, they are legitimate, but you need to understand what they focus on, what they do well. They're generally not for education. They're just simply saying, we give you, like Spot Gamma gives you information on understanding options and how they affect the daily moves of the markets. Okay, Unusual Whales. They give you access to this great big platform that just shows you all the options moving and how many and how this, that, and the other and all that kind of stuff. And if you learn to use that website, their screeners and stuff like that, and you have a strategy, you use their site to do the hunting, but you still got to have a plan. But there are scam sites out there all the time, or there's just simply companies out there that are willing to take your money and you never use it. For example, this is not a slam by any means, but I thought I would give stockcharts.com a try. Now, stockcharts.com is a fine company, but in the end, I didn't use them. I did not use them, so it was wasted money on my part. Not to say they're a bad company, they're a fine company. But I didn't use them, so I lost the money. So, because it wasn't really what I wanted. So if you're ever thinking about any of these kind of services, Bookmap, Jigsaw, any of the stuff that I'm talking about here, always do just pay for 1 month. Pay for 1 month. See what you can learn from them. See if it fits with you and assist you in making trades. And then you can decide, well, do I want to go to an annual or a lifetime or whatever. All right? Just remember, there are tons of scammers out there trying to get your money. And they got a lot of mine in the beginning because I didn't know any better. I didn't have a mentor. If you're here, I can't be your one-on-one mentor necessarily, but I can tell you, I am going to try and give you a lot of basics to help you. All right, number 2, why do 90% of the traders fail? Lack of discipline. They refuse to stick to the plan. That is like, I mentioned earlier about gambling versus trading. Gambling, people don't necessarily have a plan or the discipline to stick to the plan. You've got to have that discipline. You've got to stick to your plan. If you don't, you lose money, you lose money, you lose money. Number 3, lack of support. Wait till you try and explain trading to your friends and family. They don't care, they don't get it, they're not interested. They're on with their life and things. Most of the men in my family want to talk about cars, and they want to talk about their motorhome vacations and all that kind of stuff, and they couldn't give a poot about trading. And I tell them, oh yeah, I made this really great trade on gold futures the other day, blah, 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 blah. They don't care. And they may give you a polite nod, but they don't understand. You couldn't tell them I did a Bollinger Band trade. They don't get it. They don't want to. So you end up isolated. And that's why it's so important to find a trading group like the Bullish Bears. If you're not in the Bullish Bears right now and you're seeing this, I would invite you to come check out bullishbears.com and see if this is. We have an active Discord group. It may be something for you. Again, I'm not financially compensated. I'm a member, and that's it. But at any rate, I'll never forget coming home from my job and trying to be a full-time trader, and then the isolation set in. The nobody to talk to. I wasn't in any groups or anything like that. I was looking at some YouTube videos and stuff, and I would have all day with nobody to talk to. And it got, I suddenly realized, just painfully so, how isolated I had become. Because when I had a job, I had people I worked with talk to. I may not have liked them, but they were there, and I could have talked to them. But man, when you come home and you're by yourself, and yeah, okay, my wife's walking around the house, but she's doing her thing, and she understands some of the stuff I talk about. But the point being is that you've got to find some support because you become emotionally lonely. All right? So why do new traders fail? Lack of education, lack of discipline, lack of support. They make trades, they try this, they try that, they lose, they get frustrated, they don't understand why something happened, why something didn't happen, and they lose money and they quit. And they say trading doesn't work, only the big corporations can make money in trading, and that answer is just simply not true. Lots of people can make money in trading. But we'll talk about that coming up here as we move to the 3 golden rules. And I'm going to tell you right now, this is by far the most important thing that you've ever got to do is understand the 3 golden rules. And you must stand by them. First, the goal is to make a good trade. Now, what do I mean? Well, actually, let me go through it. Then you say, actually, the topics here. You got to manage your risk, and you got to manage yourself. Now, some of this doesn't make any sense, right? What do you mean? Of course, everybody's going to make a good trade. No, that's not what I mean. To make a good trade is to have a plan where you get in, where you get out, why that's a good entry, why that's a good exit. What makes you think this trade is going to work in your favor? Right? And it's not just because you think, oh, I'm going to go long here. No. Why are you entering at that particular spot? Why, and where do you get out? You have a plan around this trade, where you're going to get in, where you're going to get out. Now, this does not mean that the trade is successful. Remember that trading is probability based. Probability. So even if you have a 90% chance of success, you still have a 10% chance of failure. So a good trade doesn't mean that it's profitable. It means you did your due diligence. You marked up the chart. You looked at where to get in, where to get out, why you think that's a good entry, why, and how you're going to take your profits and things like that, and move your stops and whatever, okay? Having a plan. And if you have a plan and you will stick to it, you have a greater chance of succeeding as a trader, okay? Now, When I talk about the plan and sticking to it, I'm not talking about a particular trading strategy. You pick whatever trading strategy you like. The key is stick to it. There's been many a time that I've been in the morning Discord over at the Bullish Bears, and I'm looking at the chart, and I'm kind of, I don't know. And I'm listening to the morning stream, and maybe Kevin is streaming, and I'm watching the morning stream here, and I'm looking at maybe the gold futures, and I'm thinking, well, I could go long here. I think there's a better chance to going long. I think there's blah, blah, blah. And I've built a plan. And then Kevin comes in and he says, all right, I think I'm going to go short here. And I say, and all of a sudden now my plan, I was going long. Kevin says he's going short. And all of a sudden we're like, fine, I'll go with Kevin. He's more experienced. And I go short. That was stupid. Absolutely stupid, because I don't know what his risk parameter was. I don't know what necessarily, he may have been talking about what he saw on the chart, but it's not my trading strategy. And I end up getting chopped up, stopped out, or whatever else just because, Kevin's going short. Right? So you have your own plan and you stick to it. If you hear of somebody else's plan that goes against yours, it's fine to listen to it, but if you don't see it, if you don't see what they see, if that's not your trading plan, you need to be realistic with yourself and just say, okay, let me factor in what they see, and do they see something I don't? And if you have any confusion, you walk away from the trade. Okay? Number 2 is managing risk. You absolutely must manage risk. And we talk about the risk reward being 1 to 5. And saying I'm going to risk 1 to make 5. Well, that's great. But what is in that risk? Are you risking $300 of a $500 account? That's stupid. Okay? Managing risk means that you manage your trading in such a way that it's not that big a deal if you're wrong and you stop out. If you lose on the trade, it's not that big a deal financially to you. You must learn. You have to understand that when it comes to trading, you very likely could go through lose one, make 6. All right? You may go through 3 losers to make then that fourth one makes you 6. So, whatever the numbers are, just making a point here. Obviously, we don't want to lose one, but it's part of it. Okay, but if you oversize, if you're way too over leveraged in a trade, you won't make lose one because you've blown your account. You've lost too much money. You can't even get in the 4th trade. You must learn to manage your risk. Finally, on this list here, manage yourself. You absolutely positively must learn to manage yourself. Now, what am I talking about here? I'm talking about your emotions. Maybe, we talked about isolation earlier. If you're in that situation, you got to do something about it. You've got to come up with a way. You've got to join a group, a trading group that you can talk the lingo with them. They understand you. You understand them. You need to have some routines where you get out of the house if you're trading full-time from home, where you get out of the house, where you have some social interaction. But when it comes to trading, you've got to learn to manage yourself in a trade, because let's say you get into a trade and it starts to go against you and you start to panic and I don't want to lose this trade. I don't want to lose this trade. Well, if you've already got your plan mapped out up here, you already know where you get out, period. You already know where you get out. So there's no reason to panic. You either win, you may look for an early exit. That's fine. But if you can't manage yourself and you just say, I think it's going long, let's do it, without a plan, or this trade's been going on. I'm underwater in my trade here. I don't like this, and it's pulling back against me. But it's still within your risk range. But you panic and you rush your stop up, and all of a sudden you get stopped out for a guaranteed loss, or whatever. You've got to learn to manage your emotions. You should be trading cold as ice. You should be trading cold as ice with trading. Matter of fact, let me modify this here, and I'd like you guys to go look up, oh, golly, trading psychology. By Mark Douglas on YouTube. You need to go look up Mark Douglas on YouTube, Trading Psychology, and watch his videos about it. This guy knows just incredible. I mean, he did his videos back in the 70s. He's long since passed away, I believe. But what he says is incredible, absolutely incredible about understanding the psychology of trading, because you have to understand that technical analysis trading, which is what our focus will be, is about psychology. Absolutely 100% about psychology. And this is where a lot of our engineering types, doctor types, technical types, IT type people struggle with trading, day trading especially, is because they try to apply a lot of mathematics or logic to trading, and they don't understand that really more than 50% is psychological. And that just doesn't make a lot of sense to people. But we'll get into that more as time goes on. So, all right. Fine, but my point being, if you don't get these 3 golden rules, you will fail. You must have a plan. You must learn to manage your risk to keep you in the game, and you must learn to manage yourself so that your emotions do not destroy yourself in a good or a bad trade, right? Let's talk about the progression of things. We always start with paper trading. Understand that trading has 2 components to it. Number 1, there is the mechanical part of the trade. I get in here, I get out there. I put my stop here if I'm wrong, that kind of stuff. And we use paper or, paper trading, paper money, simulated trading, however it's called, simulators and all that kind of stuff. We use, which I refer to simply as paper trading, to develop the muscle memory portion. Mechanically looking at, just cold, callously looking at the chart and say, if I take this trade, this is where I get in, this is where I get out. And after you have been able to double or triple your paper account and been able to stay in that paper account making trades for a couple months in some cases, and can consistently have good winning trades, not 100%, not 100%. Remember, I talked about lose one, lose one, lose one, make 6. The point being is, you say, well, can I every week show a profit? Now, I may have had some wins, I may have had some losses, but can I show a good profit every week for a couple months? Say, but why would I possibly want it a couple months? That's like, what's the difference between a couple months and 20 years? I'm here for business, man, You want to lose your money? You flat out want to lose your money? Okay. I know there are some people that talk about on-the-job training, but let's be honest, most people don't have throwaway money. Most people do not have throwaway money, and then if you do have throwaway money, then fine. You want to do live trading, on-the-job training, knock yourself out. Maybe you can afford to do that. Most people cannot, so most people need to be on paper or simulators. a live simulator. If you have an account like with Trade-O-Vate or Thinkorswim, they have paper trading, simulated trading that is live, and you can do it that way. All right? But the point is that you develop, you get the technique down, the rhythm, the everything with paper trading. Then we can now start talking about going live, and we're going to start small, because now, this is paper trading is the baseball guy in the batter's cage over and over and over. He's in the batter's cage for hours a day, hitting, swinging. The machine throws the ball. He swings the bat. The machine swings the ball. He throws the ball. He swings the bat. But when that same person steps up to an actual live base, there's two people are on, so there's somebody on second base, there's somebody on third base. The game is maybe even as far as hits on each side. The game's even. This guy has a chance to bring that guy on third base in, and they can win the game. Then it's emotional, you see. It's emotional at that point. And, because there's pressure on him or her. There's pressure now. And that changes things dramatically. So when we go live, we start small. Maybe if you're trading futures, 1 micro. If you're trading equities, 1 share of stock. Because you're trying to get your emotions now. You're trying now to toughen up your emotions. And then then once you get consistent, you go to 2 micros or 2 shares of stock or whatever. You start doubling and doubling and doubling at that point as you build up. Because there's one thing to say, 1 micro, it's $50 on the ES. If I completely lose it, no big deal. But if I can do 1 micro over and over and over successfully, why can't I do 10 mini futures, which are times 10? It's the same trade, right? I guarantee you. That thing moves 1 tick against you, and you will start to look to crap in your pants if you're carrying, if you can do 1 micro and not worry about it, but then you go into 10 minis, full-size contracts, right? It's totally different, totally different. To put it in terms, though, let's just say you swing 1 share of a company that's $100. $100. It moves up $2 or $3 a day. It moves down $2 or $3 a day, whatever. You don't sweat that. But let's say that you can get this 1 share of stock going really, really well. And you're starting to figure this out. And you say, you know what? I'm just going to go ahead and put 1,000 shares in it. 1,000 shares. Well, then all of a sudden that thing moves $1 against you, and you're all of a sudden like, I just lost $1,000. All right? So that's the things that we need to be aware of there. So we don't start big or heavy, and we don't jump from small to big. We follow it slowly, 1 step at a time. Beware of self-sabotage. Back here, remember, wait too far. Remember we talked about managing yourself? Self-sabotage is overconfidence, which we just talked about that here, and revenge trading. Dadgummit, I lost. They stopped me out. They took my money. I'm going to show them here. I'm going back into that trade, and I'm going to make it work, and I'm going to use my Jedi powers to make that thing go the way I want it to go. Stupid. Depression. Let me tell you, this sounds so silly. Depression is real when you get to the point, though, that you make a trade, lose 1, make a trade, lose 1, make a trade, lose 1. What becomes your expectation on the 4th trade? You just about expect to lose 1. And I literally have watched people, and I have done it myself, where you just get so disgusted that you say, forget the plan, just go long. And you get stopped out again, of course. You got to be careful of these kinds of things. Overconfidence, revenge trading, or whatever it may be, they will kill your account. And you've got to realize when these things happen, you get up and you walk away. You walk away. And people say, but I got to do something today. You know what? I've been trading for 5 years, 5 times, just say 300 days a year. That's 1,500 days. And every one of those 1,500 days, well, minus weekends, the markets were open and there was trading. So unless we have a major economic technology meltdown or whatever, the markets will be open Monday, Tuesday, Wednesday, Thursday, and Friday of next week as well. So you can walk away, whether you walk away for 15 minutes or 5 days, until you get out, until you break this and get this out of your system. Walk away. Plain and simple. We talked about the isolation and needing a support system. You got to be very much aware of that. That also can bring on depression, anxieties, and whatever. Some people actually have to get on meds for this, and that's, that's a trade-off, obviously. If you need to get on an antidepressant, anti-anxiety, that is definitely a trade-off of, are you willing to take a pill that alters your bodily chemistry that if, the benefit in your trading turns out more positive and you don't have a lot of side effects from the med, okay, fine. That's something that you and your doc and your family would discuss, kind of thing. But if that's the right thing to do, then, if that's right for you, then do it. Don't be stupid. And the last thing I'll talk about here is spaghetti head syndrome. Spaghetti head syndrome, what is that? Well, spaghetti head syndrome is real simple. It means being overwhelmed with so much stuff you can't make any sense out of anything. In other words, you've sat down and you've studied 3 or 4 different trading strategies here. You've looked at Bollinger Bands, you've looked at Heikin-Ashi, and you've looked at using RSI and MACD strategies and all these kind of things and pivot points, and now you look at the chart and you sit there and you don't know what to do because you can't make sense of it. Or you look at the chart and you see an argument to go long and an argument to go short. Or you just look at the chart and it looks like somebody just dumped a bowl of spaghetti on the floor and you're looking at it trying to make sense out of it, like you're trying to read tea leaves out of it or something. That's called spaghetti head syndrome. That's something I call it. That was my name. Spaghetti head syndrome is when nothing makes any sense, when you're just totally jumbled, when you're out of sync, when you're totally confused, when you're just whatever. And all what that means is walk away. Walk away from the trading. You might hang out with the Discord. In fact, I encourage people, that's part of the social isolation issue. If you're in the Bullish Bears Discord, great. You need to show up every day. In fact, you need to keep your trading routine the same. You may not trade every day until you get out of spaghetti head syndrome. In fact, I tell you, don't trade while you're in spaghetti head syndrome. But you still need to maintain the routine. Show up, get up. If you're day trading full time, you continue to get up in the mornings, continue to come into the computer, continue to look at the chart. Just chill, no trading, no trading. Continue to log in to the Discord and listen to the morning streams or the afternoon, or Signet's afternoon streams, whatever. Just no trading until you work your way and stop studying all this new stuff. You've got to process, you've got to digest what is going into your head. And until you process and digest that, you're not going to make any further progress. It's sort of like if you're on an absolutely full stomach, you've got to stop eating. And if your stomach is hurting because you've eaten too much, you have to stop eating until your stomach can move that, break it down and move it on down the digestive tract. And you just have to stop and wait it out. Right? Spaghetti head syndrome happens. It just becomes with just being overloaded, overwhelmed. And it's something that when it happens, recognize it, stop trading, and wait until it resolves itself. So at any rate. Okay, there's part one. Looks like we're at about 45 minutes. I hope this answers some questions here for you guys. And we got a lot more parts coming. But again, this is Marzidi here with the Bullish Bears. You can find out more about our group at thebullishbears.com. And like I said, I know this is dry material. We've got more dry material to go through, but you absolutely, positively must get this material. Understand it, master it, whatever, or you will be one of these 90% people that fail, flat out. You will be. You've got to go through the education. You've got to work on the discipline and the sticking to the plan, and you've got to have a support system. Right? Once you get all this down, your odds of becoming a profitable trader go up. That's all it boils down to. So, and as I said before, the 3 golden rules and all that, this why traders fail, a lot of this goes into the 3 golden rules. But 3 golden rules spells it out. It's absolutely 100% related to the 90% thing up above. The goal is to make good trades. Have a plan. Doesn't mean it'll win, but you've got to have a good plan. You've got to have a good plan. You've got to learn not to overextend yourself in your risk. You've got to learn to manage yourself. So with that, this is Marzidi signing off. We'll be coming back with more parts in this series. Hope everyone's doing well. And see you guys around. Y'all be good. And remember, if you can't be good, at least be good at it.